Backdoor Roth. You're a high earner, you make great money, but did you know the government has a tax law designed to punish you for making over $165,000 as a single filer? It's the Roth IRA income limit. If your modified adjusted gross income is over this threshold, or over $246,000 if you're married filing jointly, the IRS literally says no more Roth contributions for you. And if you already contributed it and will make too much money this year, you face an IRS penalty just for trying to save for retirement. Here's the good news. There is a 100% legal two-step workaround. It's called the Backdoor Roth IRA. And in this video, I'm going to show you exactly how to do it without accidentally tripping the secret tax bomb that makes the entire strategy worthless and gives the IRS thousands of dollars. The key to the Backdoor Roth is exploiting a loophole. The income limit is only for direct contributions to a Roth. There's no limit on contributing to a traditional IRA and no limit on converting that traditional IRA to a Roth. So the process is simple. Put your money into a traditional IRA, immediately convert those funds to a Roth IRA. Boom! You have achieved the goal of getting tax-free money into a Roth IRA. But hold that thought, because there is a giant hidden trap waiting for you. This is the part that turns a smart tax move into a massive taxable mistake, and it's called the Pro Rata Rule. Here's how the Pro Rata Rule works, and it's the I gotcha you have to avoid. The IRS doesn't look at just the money you converted. They look at the balance of all your pre-tax IRA accounts. Let's say you had $93,000 in an old pre-tax traditional IRA. You decide to do the backdoor and contribute and convert $7,000 of new money. The IRS says your conversion is only tax-free to the extent that it is made up of non-deductible after-tax contributions. The math, your total IRA balance before conversion was $93K, plus $7,000 equals $100,000. The converted amount was $7,000. Only 7% of your total IRA balance will be after-tax money. So 93% of the conversion, that's $6,510, is now taxable ordinary income. That destroys the entire point of the backdoor Roth. It does not matter if you opened a brand new IRA account 5 minutes ago. The Pro Rata Rule sweeps up all of your SEP, simple, and traditional IRAs. However, your 401k is excluded, and that, my friend, is your tax planning opportunity. So the secret to a tax-free backdoor Roth is to have a zero balance in your pre-tax IRAs on December 31st. We achieve this with the 401k zero out strategy. If you have that old $93,000 in an IRA, you need to transfer that money into your company's pre-tax 401k or a solo 401k if you have self-employment income. This is called a reverse rollover. Once you do that, your IRA balance is zero. You then do your traditional to Roth conversion, and since your pre-tax balance is zero, the conversion is 100% tax-free. Now, a quick warning, this doesn't make sense for everyone. If your IRA holds individual stocks you want to keep, or if your 401k has high fees, you may want to reconsider the rollover. What if you already contributed directly to a Roth, but now you realize you will make too much money this year? You don't have to pay that penalty. Call your brokerage and ask them to recharacterize your Roth contribution to a traditional IRA contribution. This legally tells the IRS that your contribution was never a Roth one to begin with. Once the funds are recharacterized, you can then proceed to immediately convert them back to a Roth. That's your back door. But remember, the pro rata warning still applies. So the very last step, and this is non-negotiable, is that you must file Form 8606 with the IRS. This form documents your non-deductible contribution to an IRA, which proves to the IRS that your conversion to the Roth was tax-free. If you don't file this form correctly, the IRS has no record of your after-tax basis, and they may tax you again. If your tax software isn't showing it, you need to manually check that Form 8606 is there. Hey, my name is Arash. I help people create plans to pay less in taxes. Did you know if you like, subscribe, and comment on my videos, you will automatically save 10% in taxes? Okay, that's actually not true. Also, I need to let you know that none of this video should be taken as tax advice. However, I would love to give you individualized tax advice, all you have to do is schedule a consultation on my website, link below.